So we absolutely have to talk about Tesla stock because we are at a moment where the overall market is making new all-time highs while Tesla stock is pretty much tumbling down. And this pretty much aligns with one of the things I mentioned in the previous video. In fact, I talked about it in this video right over here 7 days ago on June 19th. I said there was going to be a big move for Tesla. Now, June 19th was right around over here. We did, in fact, have that big move, but I cautioned that the move was likely to be stifled around this area over here as there was a bit of resistance. And then we talked about, the market profile, which we'll talk about later on in this video. But that was a technical perspective. And if you're familiar with the channel, you guys know I don't subscribe to just only looking at the technicals. I think that's foolish, imbecilic, right? You have to look at the market from a much more dynamic approach. And one of the things I mentioned is that fundamentally, this may just be a buy the rumor, sell the news type of event. And the fundamentals from Tesla haven't really changed. And in fact, we have this post over here from Troy Teslike, who is an independent auto analyst, right? He's one of the best who covers Tesla. And this is what he shared today, right? He said, based on the latest data, Tesla sales in Europe remain weak, right? The chart shows sales over the past few quarters, with Q1 2025 being very low, which Tesla blames on the Model Y Juniper production changeover in March. However, Q2 shows no improvement over Q1. So sales in Europe are still looking pretty weak. Now, they did have a little bit of some optimism recently, but it's still not something that looks like it's going to overturn and get back to what we saw in the previous years and the previous quarters. And so fundamentally, we're at this point in Tesla where it very well looks like a buy the rumor, sell the news, and it's falling down at a time when the overall market's pushing up. In fact, let's take a look at the S&P 500, and we see, again, look at this, a beautiful big candle pointing upwards. And this is also what I shared in my video yesterday. In fact, let's go ahead and look at the videos I talked about 2 days ago. Massive short squeeze coming to stocks. And then again, massive short squeeze coming to stocks, tech stocks, right? And I specifically mentioned not Tesla. Now, why did I mention that there was a short squeeze coming to the overall market or the tech stocks? And when I say tech stocks, I'm really referring to the NASDAQ, QQQ, right? Which, by the way, is at all-time highs, right? Isn't that crazy? The market is at all-time highs. Now, how did I kind of make these videos prior saying, look, the market's going to go into all-time highs? It's not a crystal ball, right? It's just looking at the data. In fact, I'll show you kind of some of the things I mentioned in yesterday's video. This was from Bank of America. Their institutional clients, right? They are buying at a pace that they have not bought in a long time, right? Since 2008, we're seeing tech stocks being bought up by institutional clients. And so think of your, hedge funds, think of your asset managers. They are buying tech stocks by the handful, right? And so that's pretty optimistic. And in yesterday's video, I mentioned how, look, the reason it's important to pay attention to institutions is because according to FINRA, institutions are estimated to account for as much as 70% of the stock market trading volume. So institutions move the market. I also shared this chart, which I'm sad to share this chart again because this is like the third time, really the fourth time, because I originally shared this chart for those that are part of the Push and Profit Research Insider Group. So I apologize if you've seen this chart, but it's a very important chart to look at from JP Morgan. And I know it seems complex. Oh, what are all these squiggly lines? What's going on? Let me go ahead and break down what this chart means, right? So it's showing the positioning and leverage of hedge funds in their long and short equity strategies. And so the orange over here, the gross leverage, that's the orange line, right? That is the total exposure that hedge funds have with their long and short positions. And it's very high, right? It's at this super high level. And this means that hedge funds are massively active participating in the market, betting big on both directions, both long and short. Now, the blue line, the net leverage, right? This is the difference between the long and short positions. And right now, it's at 55%, meaning that they're leaning long, but not extremely, right? They're cautious. This is a more of the middle kind of approach. And the reason why I said, look, this is kind of the formula for short squeeze, and pay attention, right? This is the most important part. Because if you're going long as a hedge fund, right? The big money, they're going long, but they're also going short a little bit. And the market continues to push up. Well, what are they going to do? They're going to have to close their short positions. Now, when you close your short positions, you have to inverse and buy it, right? So, and think about this. When you're going long, you buy and then you sell, right? Let's go look at the chart, right? So when you're going long, you buy and then you sell. But when you're shorting, you actually sell, and to close the position, you buy. And so essentially, what I was saying is that, look, if they're, heavily shorting, right? Not as much as they're long, but pretty close. They're heavily shorting and the market pushes up. They're going to have to close those short positions by buying them, and that creates a short squeeze. And that's exactly what we're seeing playing out in the market. I said tech stocks, right? Let's go ahead and go back to YouTube here. I said tech stocks. Look, massive short squeeze incoming, tech stocks, right? I said this 23 hours ago. I also said this 2 days ago, right? This was really just a reminder from what I said the other day, right? And I know the channel hasn't been getting a lot of views. And that's because I think I delved too deep into the concepts. Oftentimes the channels that are more gimmicky and they're just like buy, and they're saying a bunch of fugazi nonsense, right? They're gonna get more views. Versus when you kind of go more in depth, right? YouTube knows its audience, and there's not that many people that are looking at the market as heavily as you, right? The person watching this video, right? You're someone who is very interested and looking to make a profit in the market, and not just from a surface level, right? Like the majority of retail traders who are very unprofitable, right? So, I talked about the market having a short squeeze. That's exactly what's taking place. We're seeing the NASDAQ push up. And we'll go back to Tesla again, right? But just to kind of show you guys, we're seeing the S&P 500 push up. And for those that are part of the Push and Profit private group research group, I won't share the trade ideas, right, that I hold exclusively for those within the insider group for Push and Profit research. But I'll talk about one, right? I'll talk about one. So for a while, I've been holding this position for Spotify, and here we go, right? Spotify is just dominating. Look at this beautiful candle going upwards. And one of the things I don't do, and this is probably another reason why I don't get a lot of views. Let's go ahead and talk about Tesla real quick. But one of the things I don't do is I'm not your gimmicky day trader, right? You know those day traders that they rent the Lambos and then they're day trading. I don't do the day trading, right? And maybe I'll talk about this in the future, why. Most institutions are not day trading, right? Big money. When you're trading with big money, you're not day trading, right? Now, granted, I'm not trading with billions of dollars or millions and millions of dollars, no, right? But I approach the market from an institutional perspective simply because I learned a lot while being in the CMT program, Chartered Market Technician, and I'm still learning, right? That's one thing that I think it's important. You should always be learning, right? I know this is a separate message from this video, so let me go back on tangent, but just remember, keep learning. Now, aside from everything, let's talk about Tesla because that's what we are here to watch. What's going on with Tesla? Now, we talked about how fundamentally the sales in Europe are not looking well. Now, going back to the technicals, yeah, we are falling down. We're hovering. We kind of, had this bullish candle. It's not that bullish, but, we opened and then we closed higher, right? But we have this wick here, which is a bit concerning. And we did bounce above, this blue line over here, right? This blue line that you see. This is the moving average, the 50-day exponential moving average. So we're holding above it. We haven't broken below it, so that's good news. But one thing that I mentioned is that when we're looking at the market profile, right, which shows the distribution of price, right, throughout time, we're in this low volume node. We're not there yet. We're actually around over here where it's kind of a high volume node. And that creates areas of support and resistance simply because that creates a psychological barrier where there's this like kind of fair value area, right? When there's a lot over here on the market profile, this high volume node, that means that both buyers and sellers are actively participating over here. And so it doesn't let price move, right? Because it can't move too high up because the buyers are buying, but then the sellers are also selling. So it kind of just remains there. And that's the fair value area. Now, when you go to the pockets, the low volume nodes, that's where you see the big moves, right? Think about like this big move going up, right? This happened in this low volume node. Now, what's concerning is that if Tesla doesn't hold above, we will enter to this low volume node. And if there's more selling pressure, we could see Tesla go right back to 274, right? Right back to 274 very quickly, right? When it's in these low volume. In fact, let me give you an example. Just like we moved up pretty fast in this low volume node, we fell down. Just the biggest moves are going to be, look at these candles. These are big candles, right? The biggest moves are going to take place and the low volume nodes, because there's not this fair value idea of the market where we have both the buyers and sellers participating. And so we're at a very pivotal moment for Tesla, and it's quite frankly a bit scary considering that everything else is moving up except for Tesla. I mean, let's look at Nvidia, right? Nvidia, oh my gosh, this is beautiful, right? Lots of opportunities in the market. You just have to go out there and look for the opportunities and understand the market from a multi-dimensional approach. You don't want to just look at the technicals. You don't want to just look at the fundamentals. You don't want to just look at the macro data or what's going on from a geopolitical perspective. You want to look at it all together, right? And that's the message that I share in all my videos. And I think oftentimes, I'm talking to you who is a very small, unique audience. And I know you appreciate it. So if you can, just hit that like button. It really does help out with the channel. But you let me know in the comment section down below, what are your thoughts on Tesla as we move forward, right? The catalyst event is over, right? It's already done. So now we're going to Q3, then we're going to hit Q4, and it may not look too well. But with that said, before you guys go, make sure to watch this video right over here, and I'll see you guys on that next video. Take care, guys.